Good morning, traders, and welcome to the Pirate Traders Morning Show. My name is Charles. I'm joined today by Lady D. Lady D, how's it going?
It's going great. How are you doing?
Good, good. So I guess the last time we talked, we were talking about the importance of replaying sessions. And so this morning you were thinking about replaying yesterday's session.
Yeah, and I'll tell you why. Because I started up my musical job again. The season started, and I had our first rehearsal in like a really long time. So I wasn't able to watch the market all day long. So when I got home, I watched the replay and I studied it. And I saw some things that when I was a new trader, I would have completely gotten trapped on. And so I just made notes of those. And I thought, let's share those today with our viewers and see if we can give them any advice for maybe how to stay out of bad trades and how to, put all these data points together we've been talking about with the market profile into making better trading decisions so we can increase our P&L. That's always our goal, right?
Absolutely. Yeah. And I will just say, adding to that note, it is something that I too do. If I'm not watching a market intraday, I feel like it throws me off the next day. Like if I have like a doctor's appointment or something like that. And so for like one day, I'm not watching the chart. It's like the next day I always feel a little bit off, and it's nice to go back and replay the previous day. And because it's not just where the market goes, you could look at the chart afterward and see where the market went. It's like, how did it get there? What was the tempo? Where was the volume? Like, how did it get to where it went? It affects your read of it,
Yeah. So I have to say that's the first day that I haven't really watched the market all day long in over 7 months, except for my little vacations this summer. So I can already feel it, like with my psychology. I already feel like I'm a little more tense than usual, just because I wasn't there yesterday to keep track of this all day. However, I did learn a lot by the replay, even though I wasn't there, and I want to share this. So I'm going to replay yesterday, and I'm going to pause it at certain points and talk about little data points that I think I saw that could have alerted us to what was really happening in the market, because I think those of us that were watching all day can agree after the initial balance area and the C period opened, it absolutely was setting up to look like a trend day to the upside. Do you agree with that?
Yes, I do.
Okay, so let's watch it and let's see. Charles, I normally do it at like 15 or 20. I have it set up for 30 times. Is that how you usually replay it? I like to do it a little slower, but.
Yeah, and I would say for the morning show here, just start it with whatever you're doing, and then we'll see how fast it goes.
Okay. All right, so I have it at 30. So this is a little faster than I'm used to watching it, but let's just try it and see what happens, okay?
Yeah, be ready to hit that pause button because it'll happen quick.
Yeah. Okay. Why is it not?
I would zoom out a little bit. It's probably.
Oh, yeah. Okay. Okay, I'm having a technical difficulty. It's not working. Why? We had it all set up. I'm hitting the play button. I don't know why it's not working.
Yeah. Sometimes it just needs to load. It may just not have loaded up fully yet. That is the one downside to window traders replays. It's not fast. It's like you got to set it up, walk away for 5 minutes, let it get fully loaded and ready, and then it's useful. Why don't you keep playing with that for a second? I'll switch it to my screen.
Okay.
And I'll walk through because you're going to be showing on the NQ, correct?
Yes, I am going to be showing on the NQ.
Yeah, so I'll walk through the ES and explain how I was seeing things tomorrow morning just to fill in some time while you play with that.
Okay, perfect.
Okay. So I will expand out yesterday's range. So as always, let's start with context, right? What were we, expecting to see yesterday in the market? What were we, what was the context that we had first thing as the market was getting ready to open? Well, first things first, we assumed the market wanted to come back for this gap fill at 40 or 54.88, right? That was the target that, we felt like the world was watching and wanting to get down there. We felt like the highest probability is that the market was going to move down there because we broke out of balance up here. So if the market was going to go higher, it should have broken out of balance to the upside. Breaking out of balance to the downside meant it needed to start backfilling the weakness below. The first of those weaknesses is that gap fill at 44.88. And so because the market had not done that yet, that was the highest probability thing that we were expecting to see in the market. Okay, great. Well, then what did the market actually do once it opened? Well, it immediately, and I do mean immediately, like within the first few minutes of the day, it pushed straight above the overnight high. Once it got above the overnight high, it continued to spend time up there. It continued to bring in volume, bouncing around that overnight high. It then poked its way up and started making new highs in the B period. So at that point, it looked like it was going to go higher. And those that were watching the Brigade stream yesterday will note I was, wrong twice with calls to the long side. The first poke above the overnight high I thought was going to hold as support as long as the market stayed above the opening price, and then it came back down. It came back through again, and I was like, okay, I guess not. They're not ready to go higher. They're not ready to go lower. It's going to rotate. And then as soon as I said that, the minute I said, okay, it's just going to go sideways, it turned right back around in the P period and started to go higher once again. So then it got up here and it started spending time and bringing in volume at the highs. And so once again, it looked to me like the market was trying to build momentum to head up and test the previous day's high. That's just a thing the market does. It pushes above the overnight high, it finds support, it pushes higher, it brings in volume at a higher price. That generally means it's going to the previous day's high. Now, I did note not to buy the highs. I did tell people, do not chase this momentum to the upside. Wait for a dip, wait for a pullback, buy the support when the market pulls back. So we waited and we waited and we waited, and the market just kept bouncing and bouncing and bouncing and bouncing at higher prices. And everybody was thinking, fuck, we got to chase this trade. And then it came down and instantly blew right through the support level that we were watching for support, which was that overnight high, right? It instantly came and just crashed right through it. So that's twice in a row I'm wrong. Twice in a row, I think it is a good opportunity to go long at the overnight high with a nice tight stop to get myself to the previous day's high. Now, for me personally, I have a set of principles that I use in my trading where I recognize that I won't always be right. I recognize where I have strengths and weaknesses in my trading. And for me personally, if I've taken 2 trades and I was wrong on both of them, the best thing for me to do is to walk away and to take at least an hour or more off from trading, because I just know I get on tilt. If I have 2 losing trades, the statistical probability that my third trade will be a losing trade is significantly higher. Whereas if I'm taking any one random trade, or I take a trade after a losing trade, my odds of winning or losing are about the same, right? But 2 losing trades in a row, my odds get worse and worse each trade I take. I've journaled, I've learned that. So when I have 2 losing trades in a row, I just walk away for the day. So right at that moment, when the B period came crashing right back down, or actually I think it was in the C period, when the C period came crashing right back down, I was like, okay, enough is enough. I got to walk away from the charts. And I literally left for like 10 minutes. And then I came back and the market was liquidating lower. And all of that is just the most frustrating days for me. Those are just the toughest, most frustrating days when the market, it's a common behavior. The market does it, where it's what we call a fake out. The market makes you think it's going one direction, and then it instantly reverses and goes the other direction. And most of the move it's going to do, it will do right then and there. And you can see that's what happened yesterday. Most of the move it was going to make, it made like instantly. And that it's just a thing the market does where it gets traders off sides and then it squeezes them. And that squeeze effect just liquidates everyone and gets people to chase at the low. So then you got sellers chasing at the low, and then they bring it right back up again and they squeeze those sellers. So to me, yesterday was an extremely frustrating day because I was off sides in the morning. So I knew I wasn't in the flow of the market and I shouldn't be watching the chart. And then I knew the biggest chunk of the move I'd missed because I literally wasn't sitting in front of the computer. So by the time we got to the latter end of the day, it was a very frustrating position as a day trader to be in, where I know the market didn't fill the gap, but it wants to, but I know there's no way to enter a trade for it because we've probably already done the move we're going to do. So anyway, that's me and my journey are you ready with your replay?
Yeah, I think I'm ready for the replay. And I'm so glad you brought that up, because I also would, this has happened to me many times where I get caught. And like you said, it's always easy in hindsight to go back and review these things, but I think it's good to do it so that we can see what data points were there that could have kept us out of the trade going long and hopefully prevented us from losing money. Because when I rewatched this, I saw many things that as a newer trader, I would have missed. So I just want to share this with our viewers right now. So let's start the replay. I'm going to pause it as soon as I see the first couple clues. Okay, so here we're at 30 times speed.
Look at that market move. The market is open and it pushes up.
Yeah, and look how much it pushes so quickly.
See how quick? That's what people need to understand. You see how it did that? How it opened and it just immediately started pushing higher. Boom, boom,
right.
boom.
And so we have this node right here of volume. Normally that would have, been a little bit of resistance, but since there was no resistance, that would have been a first clue, like, okay, let's be careful, because it blew right through that resistance. It also blew through all this time and volume that happened in the overnight low. So I'm going to continue it. Now, the other thing I wanted to mention was we had this, look how fast it goes to the overnight high. Okay, now right here, I want to pause this, because normally when the market is going to continue going higher, we see this time and volume normally building above the overnight high. Do you agree with that, Charles? Not inside the overnight range. I mean, it's approximate. It's not always exact.
Yeah, I would say not exact. Sometimes it dips a little bit into the overnight range to build that volume, but yeah, pretty much at the
But I noticed that. That was one thing I noticed at this big node of volume here. We got this time and the volume inside the overnight range. In addition, we had this prominent point of control. So the market did go up, hit the prominent point of control, which it likes to do. We also had overnight inventory was 100% short. And Jim Dalton always says, don't get tricked by this, because there's usually 70% of a counter auction at the opening of the market, which is one of my main strategies that I do. And so we had that counter auction. So I always know to be cautious if the market moves that quickly, that fast. It could just be the counter auction, because we know from the value being lower from the previous 2 days, the momentum was to the downside. So I was very cautious when I saw this, move in the replay. So I just wanted to point those two data points out to you. I also want to remind those of us who were here on Wednesday when we talked about this, we had this consolidation area, remember, right on top of that 10-day balance area, right, Charles?
Yeah, you're talking about on the NQ, a 10-day consolidation?
On the NQ, of course. And I just want to show you, I want to point this out. We had this flag consolidation pattern. I'm mainly a scalper, so this is another one of my trades I like to take. And we talked about this on Wednesday, how we stayed in this area for 3 hours before it finally broke to the downside. Now, I find this to be very important because, and I even have it marked here. For me, this was the balance area low, the breakout. Okay. So I'm going to continue the replay and just keep an eye on that area. There we go. So time and volume inside the overnight range. This was the news announcement. That big short covering there happened because some piece of news came out. And also notice we have these big volume nodes up here too, which should create a little bit of resistance.
So real quick, just pause it so you can clarify for people. When you say you're seeing cumulative volume that should create resistance and it doesn't, what signal is that giving you?
Well, for me, I just noticed that when I see a volume node like that is this, sticking out this much, usually it will cause a little bit of resistance or a retracement in the market before it can really break through it. It doesn't normally just plow through it as quickly as we just saw. So that was just another thing, to notice, like how quickly it went through that resistance. So again, look at how wide the IB is. It's setting up to be a trend day to the upside. We have a lot of momentum to the upside, so it seems. We've gone pretty high above the overnight high. So obviously, our target is the previous day's high. So let's just watch what happens here, because this is where I want our viewers to see this consolidation pattern that we spent 3 hours in before it broke to the downside is resistance. And that's, also it was the breakout to the downside. So we talked about this, the importance of retesting previous areas, right? So I would be curious in the chat if anybody was thinking, well, instead of a trend day to the upside, maybe we're just going back and retesting that breakout of balance for the continuation lower. So let's see what happens. So we took out the previous day's high. We didn't bring in any time or volume above that, and then the market starts crashing lower. We tested the half back. And it is finding support and spending time above still the overnight high. So it could have just been a pullback for a retest. But it's the C period where I think it gets really tricky. Okay, so now we're in that previous flag that lasted 3 hours, a little bit of resistance here. C period opens. Here's where most of us probably got trapped going long. It really couldn't stay above the previous day's high.
Keep an eye on those single prints and what happens when they backfill.
Yeah. We also have this set of single prints also. The market tends to like to go back and revisit those and spend time there just to see if the market accepted those prices. And then look what happened.
So, okay, that's the important moment to note right there is when it came back down, how it came back down.
So the other thing I wanted just to mention is we had this week, something that I always keep in the back of my mind is we had this week opening price with only 77 contracts, right? Charles, you always say it's weak if it's less than 100, right?
Correct.
So that was something I had in the back of my mind. I also had in the back of my mind what you talked about, I think it was yesterday, you and Paul. I was watching you guys while I was on the train to work. And you had mentioned there was that area where you could tell like the options players were just buying. They didn't want to go below that level. And it looked like those were buyers. So again, I just had all of these data points in the back of my mind, which Jim Dalton calls chunking. But I think for me, viewing this big move up here as a retest instead of considering it just as the beginning of a trend day high would have kept me out of losing money in the C period trying to go long. Charles, what are your thoughts on that?
Okay. So there's different ways to approach this conversation. And so I will talk to you about my perspective on it as a day trader through basically doing what you just did, going back and replaying the day later and looking for data points that could have, kept me on the right side of the trade. What I have done is I've built a system in my mind for entering trades where I'm entering trades with the highest probability of those trades working, but there is no system that always works every time. Right. And what I have found can frustrate me deeply as a trader is if I start looking at too many data points and I start getting too worried about, well, this is bullish, but that is bearish, and this could mean it needs to pull back, but that means it could break higher, and and I start just worrying too much about all the different things that you see, then I miss trades. I miss opportunities to make money. Now, ironically, looking at the NQ for me now, replaying, because I was watching ES during the day, I'm very annoyed because the NQ did exactly what I expected the ES to do. I expected it to find support above that overnight high and then go to the previous day's high. I didn't think it was going to keep going. I thought it was going to get to the previous day's high in reverse, but I thought it would get there. And that's very annoying because if I was trading the Q, that would have been a profitable trade. But yes, like you say, there were a lot of signals yesterday to not trust the momentum up. And that's why for me, and if the people that are watching the brigade will tell you this because I was talking about it in real time, it didn't mean don't be bullish. It didn't mean don't look for long trades. It meant wait for dips. It meant wait for the market to come back down. Don't chase the move at the high. Wait for the market to pull back down. So there was an initial move above the overnight that was buyable, but it came back through the overnight high. So that trade got stopped out, and that's frustrating, but it happens. And then in the C period, so the ES never started one time framing like the NQ did. In the C period, we had those B period single prints. Here, let me just pop over to my chart real quick. We had B period single prints that we had left behind. So at that moment, when the market was up here, right where they were catching all the traders off sides, I was saying this looks bullish and we can look for continuation to the upside, but we've got single prints that need to backfill. So I wouldn't touch a long trade until they backfill those single prints. And again, that's what was frustrating as a buyer, because they came back and then just flew right through it. There was no support at the base of the single prints, just nothing. And then they instantly pulled below the B period low. So this is where things get interesting for me as a trader. I don't regret being bullish earlier on in the morning, right? I don't regret the fact that I thought the market was going to gain momentum to the upside. What I don't regret getting into a trade at the base of the B period single prints, assuming that they could hold a support, because over a series of days, if I took that trade every time I saw it, it would win more than it would lose. It just so happens this is one of those times that it lost. What I am frustrated with myself, though, is that I stopped trading, because if I'd have sat there and just kept watching the charts, I would have caught part of that liquidation to the downside, because I would have recognized what was happening and I would have made back my losses, and then I would have been feeling great. So my take on it is, when you go back and you replay these things, you always want to do it, and you always want to take those data points into account because they can help you be a better trader. But you also have to recognize that in real time, you have to enter trades. Yeah. Even when there's conflicting information, even when there's things. So all you can do is use that conflicting information to get you into the lowest risk entries as possible. To not buy the highs, wait for it to pull back to the single prints, wait for it to pull back to the overnight high, wait for those dips to buy, but you would still want to be a buyer, because if not, you'd miss lots of profitable opportunities on other days.
Well, and that brings up a good point about how important it is for us to all have a system that we've back tested and we know the percentage rates of when it works and when it doesn't, because that is the only thing that's going to give you confidence in entering any trade, is when you know that the probabilities are above 51%, right? So if you've really done your homework and you've back tested these strategies, 50, 100 times, and you have that data, then you don't need to question yourself. You know that the probabilities are in your favor. But I just wanted to show, this example because of the importance of that back test of that 10-day balance area, because I think that was something really important to have on your charts before the market opened. This is where the breakout happened. At some point, we're going to go back and back test that. That doesn't mean the market is going to continue.
Just to correct you in case people are confused, that wasn't the back test of the balance area. That was just a consolidation range on that one day. If you zoom out, you'll see the back test was much higher. But yeah, you're talking about previous support breaking and then the market coming back and testing it as resistance.
Yeah. So do you want to continue the replay or just stop there? I mean, I think we all know what happened, at the end of the day. But
well, yeah, you can replay just for a minute so that Paul and I can talk about what geniuses we are, because in our morning stream yesterday, he asked me, he said, Charles, don't you think buying near those lows, so the overnight low from 2 nights before, the previous day, and the night before, they were all like very exact lows. And he was like, don't you think getting long somewhere down here with a tight stop would be a good trade? And I said, yes. And now replay it.
Yeah, 100%. Okay, let's see. Watch how quickly this liquidation happens.
Doobie doobie doo. We need it to go faster.
We're at 30. Come on. Here we go. I mean, look at that.
Okay, so if you guys remember, let it keep replaying. If you guys remember how quickly it went up in the morning, it was just like boop, 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 and it went straight up. And Dee mentioned it blew right through resistance. There were levels where the market should have spent some time having to play some tug of war. And it didn't. It just blew right through those levels. So the first thing you need to be saying to yourself as you're watching it push up is, yes, this is momentum, but it's emotional. It is more short covering and FOMO buying. This is not real buying. It's not real strong hands stepping in to take the market higher. We're just squeezing people. And that is why this liquidation right now is happening so quickly, because all those longs, those new longs in the morning, were emotional traders that were just FOMO buying into the momentum, not buying the dips, but chasing price up. And then they all get squeezed at once. Okay, so here we are. We're down near the lows from the previous few days. So you watched the morning stream and you heard Paul say that and you went long with a nice tight stop. And then what does the market do? Turns around right from there and goes straight back up. I think it consolidated for a while at lows here. And then it pops up later. But anyway, I'm just tooting my own horn with that one.
No, but I think this is this is why I wanted to show this today and take the time for the replay, because I think there's just a lot of lessons to be learned from going over this, even in hindsight, in terms of, keeping our level heads during these volatile moves, which are happening more and more these days. It's been so volatile lately. So how do we stay focused and stay, with good energy and not get caught up in all the emotions that we just saw right here, right?
100%.
So
yeah, thank you for doing that, Dee. I'm telling you, people have got to learn. They have got to learn to replay things, because the context when you watch something after the fact, particularly like we just did, you watch it play out very, very quickly. The context is totally different than when you're watching it in real time. And you
totally different.
Dee talked about the importance for the brigade members. I apologize. We're going to end up bleeding into the brigade stream, but this is a good conversation, so I want to have it to the end. Basically the thing is that there are two aspects to back testing your trading. Okay. The first aspect is the literal things the market does, which you could just look at a chart from the past and you could see what the market does and what the market doesn't do. The other aspect of it is how you handle those things emotionally in the moment. Just because in the past, when the market does X, you could do Y and then you would have a winning trade, doesn't mean today in this moment, when market does X, you'll be able to enter that trade. That back testing can only be done in real time, which is what keeping a trading journal is. You have to keep track of every setup you trade and keep track of why you choose to enter the trade. What got you in it? What squeezed you out of it? What changed your mind halfway in the trade? Keep track of all of that in the journal, because you're not just trading the chart. You're not just trading what's happening on the screen. You're trading your own psychology too. You're trading your own ability to adapt in that moment. And if you're not tracking those things, then you won't be able to improve.
Best trading advice ever right there.
You heard it here first, folks.
Yeah, for sure.
By the way, just for a quick plug, all of this is covered and more in my Markets and Minds workshop. And this weekend is the last weekend for the early bird deal. So if you want to sign up, it's now or never.
Yeah, for sure. Awesome,
okay, real quick, because I know people love TA for the day. Basically, I still think we have momentum to the downside. This gap is still unfilled. We filled it in the overnight, but we don't count that as a gap fill. So that means the market is likely still to come back and fill this gap to 54.88. And then we will monitor for continuation lower from there. If I'm wrong today, the only thing that will convince me I'm wrong is the market getting above yesterday's high. I'm not going to get fooled like I did yesterday with this overnight high fake out again. Okay. So if they make it look first thing this morning like they're going higher, I don't care. I have to see them break this downtrend on the daily, because again, everything is about the daily context. And when we look at the daily chart, we had momentum. We had balance. Now we have a breakout of balance. That is new momentum to the downside. So until I see cessation of this daily trend down, my assumption is we're coming back for that gap we didn't fill yesterday. Anything else from you, Dee, before we say goodbye?
No, just quick that the U.S. jobs number, that was an important announcement that came out, and it was, it didn't really move the market that much, but people are now talking more about the possibility of a 50 basis point rate cut and maybe some weakness in the economy. That's all.
Perfect. Thank you very much. Have a good weekend, D.
Yeah, you too. See
All
ya.
right. Bye, everyone.
Bye.